Good morning and welcome everyone to Money Control live stream. You're watching the opening bell and I'm your host Nickey Mirchandani. Well, a good start to the day indeed. Indian equity market braces for a wrap-up start. Early Santa Claus rally perhaps on the Lal Street. GIFT Nifty indicates a strong gap-up start, up by 1%, indicating a start about the 21,200 mark. Dow ends at a record high as Fed signals in lower borrowing cost in 2024. Federal Reserve keeps interest rates unchanged for third straight time. Policymakers expect to make 3/4 point cut to their benchmark interest rates next year. Talk about Asian peers. Well, they've joined in the global rally in stocks and bonds on sign that Federal Reserve will cut rates next year. Japan equities underperformed the region, partly weighed down by a stronger yen. Talk about FII. Well, they continue to be the buyers there. The bought shares to an extent of 4,710 odd crore. DIIs have bought 958 crore. Beg your pardon, they've actually sold in equities to an extent of less than 1,000 odd crore number there. If you talk about just the trade setup, well, longs, you have more of shorts position perhaps building in there. But FII and strong futures, overall, they have been the net sellers in index futures, in index options, and also stock futures, bank nifty futures, and bank nifty options. That's the seller across the board. We'll talk about F&O ban, no new entry. What still remains in the ban is India Cement, Hindustan Copper, Balrampur Chini National Aluminium Company, Delta Corp, India Bull Housing Finance, and Z Limited. What comes out of the ban is sale. Talk about the Nifty PCRQs, or the put-call ratio as they indicate. A number which is less than 1 usually indicates more call writing there, and the number now is at 0.96 versus 0.94. Clearly, Santa has delivered in Christmas goodies. It's hinted in 3 rate cuts in 2024. The bond yield has collapsed to 4%. Fed says 75 basis point market has factored in a total of 1.5% rate cut in 2024. But without further ado, let's bring in the technical guest for the show, Chandan Taparia from Motilal Oswal Financial Services, who joins us early this morning. Well, how does the trade setup look like, Chandan? It's a good start. Do you think it's going to be a good start to the day? What's the strategy one can look at and the immediate support and resistance level for the markets, Nifty and Bank Nifty?
Good morning, Nickey. Thanks for having me.
Pleasure.
And congrats for the new high again.
Oh,
May we continue to hit.
We haven't really started, but that's an anticipation that 21,200 mark. Do you think we are going to scale past that level just at the opening deals?
Yeah, there are highly likely that market will surpass this zone and much beyond that. As you mentioned that yes, market is all set to celebrate the Santa rally. Already we have seen a major breakout just a couple of days back. So we believe that 20,850 could act as a major support. This rally will extend to 21,250 and can gear up towards 21,500 zone as well in next couple of days. So as of now, first I am closely looking at 21,250, and if opens slightly higher, then we can even shift our support to 20,025 as well. So as of now, as per the closing level is 19,850 to 20,250, 20,000 with support of 20,850, upside is 21,250. So look at the bullish bias even after the opening. If we see the dip of any 20-30 points, go and look for buy on decline stance. So Indian market is all poised to set the for next rally and look for 21,250, 21,500 zone on immediate basis in the market.
All right. You said the resistance level for Nifty was how much, Chandan?
21,250 and 21,500.
Okay, 21,250 and 21,500 resistance, and 20,850 is on the support side. Chandan, Bank
Yes.
Nifty, what's your strategy? You think it's going to be a good rally coming in for Bank Nifty as well?
Yeah, so we have seen a strong rally of 5,500 points in just 30 days in Bank Nifty. It witnessed a consolidation of last 4-5 days now, forming a pole and flag pattern which has bullish implication. So now with support of 47,000, Bank Nifty can see the movement towards 48,000. So 47,000 to 48,000 is going to be the range for Bank Nifty with bullish resistance to hit the upper side.
A few of updates coming in for IRCTC and Sunteck Realty, where Sunteck Realty have the promoters, which is going to be one of the promoter which has exited in the shareholding in the company, Starlight System. They've sold in 30 lakh shares and completely exited out of Sunteck Realty. A, your assessments for Sunteck Realty, and B, IRCTC also, which is now planning to expand beyond the railway category, essentially non-railway categories. Your word coming in on this one as well on the technical charts, please.
Yeah, so talking about Sunteck, major trend is positive. A small decline was seen in last 2 days, so that will be bought again. So with support of 465, look for 500 plus and beyond. IRCT looks good, and I noticed that earlier multiple time IRCT came to 770, 760 zone and turned lower, but this time the trend and momentum is clearly strong. It is making high rise, high lows from last 12, 13 days. So positive placement on IRCTC. One can go with buying positions. 770 is the support. This stock can head towards 825 levels.
Should the markets be traded? You think banks or IT? Which of the two themes do you like the most? Chandan, we are going to be coming back to you in just a bit. But banks are likely to lead the rally if FIIs join in. The chances of the dovish commentary now working in the favor of the markets clearly seems to have set the stage for FIIs to come back in a big way ahead of general elections. And let's look at the start. Well, we were anticipating a start roughly around that 21,000, way above that market. It is at 21,000 level clearly, with gains to an extent of 0.75% out there. It is a good start to the markets, perhaps. Let's wait and watch. Well, a percent of tick coming in even for Bank Nifty, 47,500 mark, about that level. Sensex also is trading pretty decent in early deals. Let's talk about the mid-cap index. Well, there also a bit of outperformance which is coming. Talk about the small cap. Well, a bit of outperformance there. Broader counterparts seem to be doing well. And in terms of IT and PSU Bank, well, Nifty is at a record high level and it is a good start for the markets, just in line with what we were anticipating and perhaps now joining in the global rally, just like most of the peers. Well, perhaps celebrating in the dovish commentary that is coming through clearly. But we are also going to be talking about Nifty PSU banks and Nifty IT. These are essentially two major indices that we're going to keep a close watch out on for. 1.5% gains coming in for Nifty IT basket, and talk about Nifty PSU banks just to see if there is rally and momentum building in even for that category, which thus far has been an outperformer by a huge difference even on YTD basis. PSU Bank also doing well in trade, more than a percent gains coming on that one. Let's talk about the top gainers and the top losers that we have on the screen just to see where the momentum is. Well, Tech Mahindra, Hindalco, Adani Ports. These are the top gainers there. Let's also talk about the other top. Well, no surprise for guessing. It is IT-led rally which is coming on Nifty. Wipro, HCL Tech, Infosys, right there at the chart. We indicated that it is a bank and Nifty. Combine the two and you'll see the gainers. Well, that's exactly the trend that has played out in the markets. Let's talk about the top losers just to see if we are looking at some amount of losers out there. Power Grid, Nestle India, Tata Consumer Products. These are some of the other losers. Asian Paints, Cipla and Titan at this point of time are witnessing some amount of weakness, but it is a good start to the day. And let's actually bring in our senior markets editor there, Santosh Nair, who joins us early in the morning to decode what does this dovish commentary from Fed mean for the markets. Is most of the rally, or let's just say the good news, factored into the market? Early Santa Claus rally coming in for the last street, Santosh, isn't it?
Well, yes. Hi, morning, Nickey.
Good morning.
Clearly, this move has come as a big surprise for the market. Market wasn't expecting a dovish stand from Fed because this is a marked departure from its earlier policy. The Fed had been consistently maintaining that interest rates are likely to stay higher for longer, and it had said that even though there were some signs of inflation easing, they had been maintaining for quite a long time that convincing victory over inflation could still be some way off. And now by saying that it's effectively done with hiking rates, clearly the Fed seems to have signaled that the battle over inflation has been won. So that's a big positive for the market, more because this was something that had been not expected at all. So I don't think this is yet priced into the market. You could see the positive sentiment for continue for some more time, and clearly there seems to be upside in the market from these levels.
All right, more good news perhaps still waiting for the markets there. But Santosh, what does this actually mean for sectoral indices? Do you think large caps now will come back in a big way? Not to take away the fact that we're also looking at elections and sometime soon in the next year. You think with FIIs now perhaps pouring into the markets a little more, large caps will come back in favor, and so to say even banks and IT for that matter?
Well, the biggest beneficiary, I think, Nickey, could be IT in the short term, because that is where the major concerns were. The majority view in the market was that probably US is headed for recession, and that's always bad news for Indian IT companies. But now with the Fed signaling a dovish stance, it clearly does look like recession is completely out of the picture. So you could see some easing of the economy, but not the kind of slowdown or recession that people were worrying about. So this is a big positive also, because market was by and large underweight on IT. So that is the other reasons why you could see IT stocks jump in a big way. And as for your other question, will you see FIIs now, will you see the rally in large cap? I would think yes, simply because we are now seeing FIIs return to the market, mainly because the political uncertainty is now behind. So that's been the first trigger, and now you have interest rates also coming up, because RBI had been so far holding back, because clearly economists felt that the RBI was unlikely to cut rates before the Fed will do, because doing otherwise could possibly mean a pressure on rupee, which RBI did not want. So now that the Fed has signaled a rate cut, the general expectation is that rate cuts in India too could be around the corner. Specifically on large caps, I think when you're going to see more FI money come into the market, clearly small and mid caps won't be able to absorb much of it. You also have large caps which have underperformed for a while now. So I think there is a strong case for large caps at this point in time. A lot of incremental money that you're likely to see coming into the market, much of it will go into large cap, because that's the only sector which can actually absorb the huge quantum of FI money that's likely to come in.
Point well taken. Santosh, please stay on with us. We are also going to go across to Chandan and check with him what does he make out of this market open, of course, and in the next big trigger that she thinks the market can now move into, the strategy that now he thinks it's clearly market. I don't think it's given us an opportunity to buy on dips clearly, but with the start that we're looking at, what's the strategy that the viewers can take up next?
So like whatever dip, if you get only 20-30 points, utilize it. So right now trading near to 21,110. If you get near to 21,50, 60, whatever level, keep support of 20,950. Look for 21,250 zone in Nifty index. Looking at Bank Nifty also, right now it's trading near to 47,700. Any dip you get near 47,500, use it with support of 47,250 for 48,000. You can also focus on the stock specific. Positive on most of the IT names. So Tata Elxsi is one of the strongest counter, now quoting near to 9,100 something. So buy this with support of 8,900. It can head to 9,400 levels. Positive on the other IT name, including HCLT. Apart from that, if you look at the sector wise, we are positive on the metal, mining, power. So NTPC, NMDC are two other names where we need to focus apart from momentum in IT counters.
Sure, Chandan. We'll leave it at that. And thank you so much for taking out the time and having this conversation with us.
Thank you.
All right, now let's go straight across to Andrew Holland, the CEO of Avendus Capital Public Market Alternate Strategies, who joins us early this morning to have a further conversation of what does this Fed move mean for the market. Is most of the bullish stance, or let's just say dovish stance, which is coming in from Fed, factored into the markets? And to take the discussion forward, of course, I'm also being joined by my senior colleague, Santosh Nair. But to you, Andrew, first, what do you make out of this? The last time we spoke, you said it's going to be a Santa Claus rally for December. Anticipate big moves coming in. You think much of this is already priced in?
Not really. I don't think anyone was expecting to, to play Santa Claus that much. It's not quite it really is a big pivot, actually, to be honest. I mean, I don't think anyone was, even when people are asking questions about, what would change his mind about bringing down interest rates next year, he was very clear that that's going to happen. So I think the market really liked that. And so it's a bit like now in markets, it's a bit like you have to do your last minute shopping for Christmas. And I think we're all trying to do that today, because, you've had that rally of 5%, which was on the back of good GDP growth for India. obviously the state elections. But, you could have that extra 5% rally in the first quarter ahead of the kind of general elections, plus the fact that now, that interest rates are only going to head lower. And it's going to head lower in India as well. So is it first quarter, second quarter? We think it's first quarter, and that's what the markets will price in the first quarter.
Sure. Now with this trigger already played out, what do you think will be the next big trigger? Do you think FIIs will come back into the market in a big way? Of course, I was also having this conversation with my colleague some time back. If ITs now, perhaps it is that moment where IT stocks will start performing for the markets. What's your assessment?
Yeah, no, it's going to be large cap led, it's going to be IT led, and it's going to be bank Nifty led. So all of those two sectors are big heavyweights in the index. So lends itself to the Nifty, moving up quite sharply. I think also, given that this will give more confidence to corporate companies in India, the capex cycle will start to accelerate ahead of the into 2024, and that's going to be good for in the short term, good for metal stocks as well. So I think those three sectors will be the main beneficiaries of Federal Reserve Powell's kind of dovish Santa Claus kind of gift that is given us.
Clearly, what do you think? So now the macroeconomic indicators seem to be working in the favor. Now you have the political uncertainty behind us. You have the dovish stance coming in from the global setup. So it seems like the stars have all aligned for Indian equity markets well ahead of the election. What is that one big trigger that you think can change the market's direction?
So you're right. I mean, all the tailwinds there. I think as we get towards the general election, I think the markets might start to think about, would there be any changes in the capital gains tax? And I think that's something that we've all forgotten about. But obviously we saw it in the kind of fixed income market or the bond markets in terms of aligning tax rates. So I think this is something that the market might need to kind of think about. But I think at the moment we'll just enjoy what the market's giving us. So, but that would be one trigger I think the market might have to think about and would be a concern, obviously.
Andrew, what's your take on the third quarter earnings? How are they likely to be according to you?
I think they're going to be okay. I don't think there's going to be anyone knocking the ball out of the park. IT will continue to suffer, but you've got to look ahead now and say in 6 months' time, where will we be? We're looking at lower interest rates, great for banks. We're looking at obviously some slowdown in the US, but obviously that will bring down interest rates. So good for tech. That's a tailwind for RIT. We usually lag tech by about 6 months in terms of performance, and we've had some great performance from tech in the US. And obviously for metals, which I mentioned, you would have the capex cycle starting, and for banks, lower interest rates will take some of that pressure off the NIMs and deposit deposits, which every bank is kind of competing for very, very aggressively, will just ease that momentum, I think. So that's a good that's what I would see in terms of the kind of themes that will play out over the next quarter.
Sure. I'd also wanted to check, what do you now think? Sure, you've already given you've told us that you now think that large caps will do better as compared to the broader counterparts, but something like small cap and mid caps, you think that are completely out of the way, and one should now be focusing themes like Ritik, where you have HDFC, Reliance, Infosys perhaps coming back in a big way?
Yeah, no. So I think it's going to be, this part of the rally will be large cap led, and then once the expectation of interest rates going lower, capex cycle starting to pick up by private companies in India, then that's when you're going to get that small and mid cap doing catch up again, if not overtaking the kind of indices. So we talked before, Nickey, in that the index is something they all look at, but it's the themes underneath which will make you the most money. So again, the whole thing about experiences, travel, hotels, airlines, premiumization in the beverage industry. All of these are going to continue to play out, along with defensives, renewables, defense sector, renewables, and the capex cycle, which is going to play out. So I think the index will lead in the beginning, but then you'll find a lot of great opportunities in mid and small caps as well.
Andrew, they say when everything looks perfect, that's when you start to worry and perhaps, adapt a little bit of a cautious approach in the way you go about with things. With this kind of, picture perfect setup that now we're looking at, could you outline or suggest few factors or one factor that you think can be a party pooper for the markets like this?
So what could happen is a few things. Obviously, geopolitical could be something that we're kind of a little bit complacent about at the moment. Not just what we see happening in Ukraine and Israel, but maybe somewhere else. I think also, as I mentioned, the fact that there could be some kind of move towards aligning capital gains tax for equities going forward. That would be something the market needs to think about. But I suppose really what could take flows away from India, you would say that India should get a lot of flows now, would be China, doing some huge stimulus, which will change the sentiment back towards China. And those flows go more towards China because it's a very cheap market compared to India. We will get flows, but maybe not the expectation that the market has. And that would be a bit of a dampener, I think, as we go into 2024. But we'll have to see if China does that. So those are the kind of, I would say, the kind of more smaller negatives. But I think at the moment there's nothing I can see out there at the moment which will change the momentum for markets in the very short term, because interest rates are coming down. It's been confirmed by the Federal Reserve, and we'll see what the ECB and the Bank of England say today, but I would have thought the message would be equally the same.
All right. With the kind of frenzy that we're seeing also from the primary markets and the bunch of IPOs that have now lined up, perhaps some even at lofty valuations, is that also a reason to worry, where you think that the market might have just now reached the peak, or you think we can further build on to that momentum? What's the kind of levels that one can look at ahead of general elections?
So it's a great point, Nickey, actually, that you make. I mean, I think, in the past week or so, there's been, 6 or 7 block trades, QIPs, then you got the IPOs. So the market was getting a little bit exhausted by a lot of, issuance by companies or by private equities selling out. That's been, kind of well absorbed. But it was just kind of, that flow of monies, wanting to raise money, I think was holding back the market. This will give that extra fillip in terms of the interest rates. But I think valuations are still okay. I'm thinking that earnings will start to have to be rise in going into 2024 as that multiplier effect of government and private capex starts to play through many sectors, and with the oil price and other commodity prices remaining subdued, that should help the margins as well of companies, or at least have margins kind of stay where they are for the time being. So that's what I'm thinking, really. I think I'm trying not to kind of think of too many negative things. I usually do, Nickey, as you know, but at the moment I think we can just enjoy the fact that interest rates are coming down next year.
Yeah, that's perhaps the tendency of most of the pessimists around. We tend to find some amount of spots of weakness in the areas when it's picture perfect. But Andrew, thank you so much for taking out the time and having this conversation. It was a pleasure having a chat with you.
Always a pleasure, Nickey. Thank you.
I'd also want to talk about Inox India. It's the cryogenic tank maker, which will be launching its IPO on December 14th, which is of course today. And the IPO is entirely an OFS from the existing shareholders. Siddharth Jain, Pawakumar Jain and Nayantara Jain are some among the selling shareholders in the OFS. The entire proceeds, excluding IPO expenses, will go to the selling shareholders. The company will not get any money from the issue. And the desire to gain visibility in the export market is perhaps the reason for the listing. But it remains to be noted that the selling shareholders will get multifold returns to its investment with this initial public offering. But that's all that we have in this edition. With this, it's a wrap from Santosh and myself and the entire team who puts this piece together. Thank you so much for watching. Please do post your feedback for us in the comment section below. Follow us on the link at the bottom of your screen. And for rest of the update, stay tuned into moneycontrol.com and Money Control app.